Righto, Money Miners, welcome back to another week. Deterra's done a deal last week. And it's a bloody riveting stuff, Ricardinho. This is like something, a big, I guess it's a life achievement for you in a way. Like
I don't know if I take credit for that.
Yeah, but it needed to happen for you to sort of go on the next voyage of who you are, I feel. And you're going to get right balls deep into it. JD, we've plucked a bit of shit out here. You've gone lithium. I've gone, have a guess.
Uranium.
Oh, but you just sort of, you asked about Japan nuclear. I'm like, let's talk about nuclear power plants.
We want to know. The punters want to know. Why not, mate?
Just stay tuned, uranium bulls.
Yeah.
Mate, Rio, bloody, are they kicking off
Rio.
Jadar?
Oh, yeah, that's what started your lithium thing.
Set to get approvals. I haven't got them yet, but that was, a bit out of left field. And
crazy.
Yeah, forgive me, I've gone into BCI Minerals for some reason.
Oh, that's all right.
We'll get there.
But do you think, as on the back of me possibly going to Canberra, I need to know about nuclear power plants.
Yeah.
JD, you'll possibly be my advisor, so I need you all up the curve on everything lithium battery EV related.
I like the sound of that, mate. Let's make it happen.
Right, Ricardinho.
Mate, now that you've told me what you guys have covered, I'm not sure this is the headline story. But heck, I'll go
It
into
is.
it anyway.
Let's rip in.
It is.
Deterra, mate. Deterra. So should we call them Deterrable from now on? I reckon I'm going to roll with that. They've finally done a deal and the market's not happy about it. Not happy at all. I don't know if you guys have been paying attention, but
I saw the spark chart.
Spark chart's not good. It's not good.
Down. Prices are down.
Before I get into the weeds too much, can we just say up front, we've been as vocal as, sort of anyone out there picking on Deterra. They're an easy target after all. Yes, a lot of our rhetoric has been, they still haven't done a deal. Why haven't Deterra done a deal? So naturally you'd think we would have an inclination to be positive about the fact that they have done something here. But up front, I want to play this snippet from JD literally 12 days ago. It's an important nuance here, all right? So we'll play that first. Iron ore, Deterra, right? The bloody iron ore royalty company.
Fuck, how good are they?
Are they going to do a deal, ever? So when I was researching...
Do they have to?
Oh, God.
No, they don't have to do a deal, but they have to strip out the corporate cost if they're not doing a deal.
Yes.
That's the thing.
Yes.
Yes. I wouldn't force them to do a bad deal, but they don't need to have the overheads they're having if they're not going to do a deal.
You could just have a COSEC, couldn't you? Just to put the announcements out.
Just let me do it. I can...
Okay, they've done a deal, JD.
They've done a deal, and Trav has dissected it. So the options were there, and there's a meme to be made about this one at a future date. But let's get into it. Trident Royalties.
Yeah, and I'll come back to your sentiment, I think, in just a moment. So the deal is Deterra's buying Trident Royalties. This is a listed royalty company in the UK. It's listed on the AIM exchange. It's got a portfolio with a NAV that it's pretty heftily weighted towards development assets. I'd describe it, notably Lithium America's Thacker Pass project. So I've seen some quotes saying that Thacker Pass, the royalty on that asset, accounts for as much as 40% of this company's NAV, and that's not in production yet, but might be by 2026, 27, 28. But obviously, when you have development assets, there's uncertainty around those cash flows because lots can go wrong in developing and financing an undeveloped project and commissioning them.
And when the cash flows all arrive.
Yeah, exactly. If they arrive sometimes. So what are they paying, right? The deal has been struck at 49 pence per share. That's a 42% premium to the undisturbed price on the 23rd of April, which values the equity at about, in Aussie dollar equivalents, $276 million. But they're assuming Trident's debt as well. So the real number is an EV of north of 300 million here. But what do we need to know about the transaction here? Deterra submitted an NBIO on the 23rd of April at 44 pence. So they must have had some argy-bargy with Trident on value before being allowed to look under the hood on the 18th of May. That's when the CA was signed.
Non-binding indicative offer?
Yep. Well done, mate. All over it.
Go, Matthew.
And here's the most important thing that's upsetting current shareholders, though, right? It's Deterra's dividend policy payout ratio is getting cut in half from FY25 going forward. So it's currently their payout to dividend ratio is 100% of NPAT, and it's going to now be reduced to a minimum of 50%.
Oh, that would have ruffled a few feathers,
Big time.
I assume, for the big holders.
Big time. Here's a quote from MD Julian Andrews that went with that announcement. Today's adjustment to our dividend policy is designed to better align it with Deterra's targeted longer-term balance between capital growth and income returns.
Well, they've already got a bit of capital growth to make up for because the share price has tanked.
Totally.
Not tanked, but it's gone down.
Yeah.
So why does this matter so much, right? Deterra is a cash cow and it pays an amazing fully franked dividend to its shareholders. And guess who loves fully franked dividends? Australian institutional shareholders. They love it. So naturally, its shareholders over time have become exactly the sort of shareholders that love 100% fully franked divvies. They pop out, the divvies pop out, and these shareholders, they buy it for the yield, and there's tax advantages of doing it that way. So for the most
Go Australia.
For the most part, those shareholders have even been, comfortable, I'd say, casting a blind eye to the obscene cost basis built into Deterra over the last few years because of that dividend yield. And now that's getting cut in half.
If you want to learn a bit more about how that all came together, the chat we did with Sandon Capital, Gabriel from Sandon Capital, was a cracker, and he was one of the key makers pushing Aluka to spin this out. That was a journey that took from 2016 till just about 2020.
Mm-hmm.
Yeah, and like when you say, I wouldn't say it's obscene corporate expenses, but unnecessary. Like for how much money they make and everything, like it's still high 90s EBITDA, bloody everything, but it's for the proportion of work required. It's obscene. Yes, it's obscene. Yeah. But it's not. She ain't next gen levels.
No, but yeah, I mean, you'd argue next gen's got more work to do, but Deterra has not created any value other than like literally collecting a check from BHP and then distributing it back out to its shareholders. It's built out this massive cost base. It's got full-time employees of 9. It's like this massive BD team, this whole endeavor to build out this royalty portfolio. But shareholders have there's no like deal they could do to create value because they've got the best bloody royalty. So that's kind of the scenario that's led to this. I think it's worth going into that cost basis point though, Matty. And here's some excerpts from a Substack by Buyback Capital that I read this morning. He says, for the financial year 2021, CEO Julian Andrews and CFO, now head of corporate development, Brendan Ryan, received a combined plus $1 million in compensation. One ponders the question, for what? I reiterate that until quite recently, Deterra's only function was in the collection of royalty payments and the dispersal of them to shareholders in the form of dividends. Speed the clock forward to 2023, and Andrews and Ryan's combined statutory compensation eclipsed $2.5 million, a tidy sum for the passive collection of $240 million in operating income. Deterra now has annual expenses totaling more than $11 million, and as I mentioned before, a full-time staff of 9. So it's this very point that I think is worth dwelling on because I actually think it drove the deal that we see here. I think trashing on Deterra's cost basis has become a meme. We all do it. And the noise has been getting louder and louder about that cost, the cost fat in their in the company structure there. So I think the equation for Deterra's management was a simple choice. And, JD pointed this out in that excerpt, but, the status quo of high salaries but no activity is not sustainable for much longer, or an activist will come for us. So what do? We either remove the corporate costs from the business and run it lean, or do a deal knowing it's 99% likely to be a bad deal because we already have the world's best royalty and funding and acquisition will piss off our shareholders. And they chose B, right? Even though I'd venture to argue they probably knew it was the more value-destructive decision for its shareholders, at least over the short and medium term.
It's heavily dependent on, I'm sure if Thacker Pass starts pumping out friggin' sedimentary lithium, she'll be all good. But there's a bit of a, as you said, short to medium term for that to happen.
Yeah, and the level of risk, the riskiness associated with those future cash flows, is probably unpalatable to their existing shareholder base. Yes,
and it's the first of its kind, I'm pretty sure, for the sedimentary process.
For that mine, that flow sheet, there was a question about that flow sheet in the call. Yeah, that's the first of its kind too, when it comes about in a few years' time.
Like you said, Matty, since the announced deal came to market, the share price has created 9%. Look at the damage on the Spark replay. The morning trade opened on Friday after the deal. Ouch. So I'm keen to share a few opinions from Twitter on this deal too. This is a tweet from Andrew Brown who says, these development assets are costing more than US $150 million after costs and changing the nature of Deterra as an investment. Basically, they've punted about 45 cents per Deterra share on a bunch of penny dreadfuls with potential cash flows 4 to 5 years out, so Andrews gets a bonus. If I was Schroders or Perpetual figuring their investment strategies, I would be more than annoyed. Awful stuff. Thankfully, not a holder. Look, and I'm not sure it's a bonus. I haven't looked into the way that REM is structured, but I think of it more as a likely preservation of existing obscene remuneration that's already in place. The AFR picked up more comments from Andrew in a write-up. This is a quote from the AFR. Andrew Brown, a fund manager at Investment Trust East 72, criticised Deterra's deal. Why would you dilute the BHP royalty, he asked. Have somebody cash the cheque and buy back stock? If the royalty is worth buying, Franco-Nevada will buy it first. So Deterra turned a brilliant asset into a terrible company. I don't hold Deterra, but I wish I could and hope an activist comes along.
You're there now. Your mate's getting involved with his blue tick.
Jeff Wilson, he
the big fella.
He retweets comments from Andrew Brown and goes, so incredibly disappointing, Andy. The ASX talks about corporate governance principles and updating them. They need to be more specific with fit and proper. A director must have the necessary skills, knowledge, experience, diligence, and soundness of judgment to undertake the duties of the role. Clearly, Deterra directors will fail this test. Punchy, those that understand, like the Jeff Wilson sort of, licks will appreciate why he's such a big fan of fully franked dividends and owning those sorts of companies.
He gets their fully franked dividend and gives it to his people as a fully franked dividend.
Yeah, totally.
Just moving them around.
Buyback capital. So this is the guy that wrote Substack. He's got a comment here, 2.5 million a year to light shareholder capital on fire.
Oh.
You've got a couple of comments from YouTube too,
yeah, there was a
mate.
couple on YouTube. There was even one on YouTube last week from, I think it was the Stephen Wood, because they're Iger Cap were a Deterra holder as well. Yeah. Great comments about Deterra. G&A costs unhappy shareholder. Thank you. So yeah, G&A costs unhappy shareholder. Thank you. So I take it he's a shareholder. He's unhappy. Doesn't like it. Next, Matty has to be the best sponsor promoter on YouTube. Oh, fuck. Oh, that's awfully kind. I just saw that one too. Watching this episode in the shower, get wet. Fucking, oh, geez, I'm a bit all over the shop here. You boys put this in? Oh.
I do think that, yeah.
Yeah, God. Anyway. Bloody, that's, not everyone's happy about Deterra, but good to see the punters enjoying the show whilst they're getting wet in the shower. Tell you who else is getting wet, Maker Metals.
Good on them. Good on them.
It's a fish. They've bought the dongers from DeGrussa. They've also engaged the services of GetWet for some on-site water-related work. The revival of Andy Well is coming together. I can see the slogan. Maker Metals, keeping moist via GetWet Solutions.
What else can you see,
That's going to be on the bloody website, mate. I can see bladders going there. I can see poly welding that will then make me see some pipes being filled up with water from pumps that all supplied and installed by Matt.hall and the team at GetWet Solutions. So, mate, I've even put his phone number in the show notes. So, let's make Australia dust free. Go Australia.
Go Australia.
Good on you, Maker Metals. Anyway, sorry, you fucked me up there. But right,
mate, I'm always
anyway. So I think
get wet via a detour. Yeah.
Anyway, so the market's pretty negative about this Deterra deal. Can I ask you this? This is just, you know me, I like layman's explanations just for things. Mm-hmm. Cutting the dividend in half to pursue further opportunities, why would you do that instead of having the debt capacity? They've got the $500 million undrawn debt facility. Why would you cut the dividends now and not have a massive debt facility in place that you could then pay off later instead of cutting the dividend right now?
You've got to pay the debt off somehow. Right, and the only way that they can pay that, the that off sustainably is with the cash flows they get from Maxi, the Trident cash flow royalties, aren't going to chip away at that given the price that they're paying for Trident.
So, but what if they, for these future opportunities beyond Trident, because that's what they're cutting the dividend policy for, yeah, for more future royalty deals.
That's right.
Yeah, but why can't they pay the 100% till now, till they find another deal, and then once they do get that deal, they use debt and then cut the dividend after that to pay off the debt, rather than pissing everyone off now and cutting the dividend?
They want to build a pile of cash that is their own, so that when they, the time comes and they want to do a deal again in the future, it's not 100% from borrowed funds.
Right.
That's the thinking behind it.
Yeah.
Yeah.
That's a fair question. And I think the whole series of events with this deal is actually kind of strange to me when you just look at when things were announced to the market and communications with the market. Like the announcement dropped Thursday after market, and just an announcement though, no investor presentation, very little detail about Trident's portfolio. There was also an announcement about the dividend policy change that day as well.
I think they'd heard that we were dropping an interview on Friday.
Yeah.
They thought they'd get away with it.
Yeah.
So is it being perceived as a bit of a punt just because of the whole Thacker Pass thing?
I think worse, yes, but worse. And I'll get to that. So Friday, right? So Thursday they dropped announcement, no investor presentation, right? Nothing. So Friday comes around, they're probably copping some flack for the little detail they provided about, merits of the transaction and all that sort of stuff, because they then drop an announcement saying that they will do an investor call on the transaction, but not on Friday. They're going to do that on Monday. And they actually didn't even drop the presentation then. They dropped that presentation today. And when that presentation came today, there was literally 5 slides of information only for a fucking M&A transaction, obscene in respect to just how little, how bafflingly light on the detail it was. Didn't provide any assurance, I think, to the market that they paid an appropriate price.
Yeah.
And that's one aspect of the deal that, I think we're yet to explore those is the Trident portfolio itself. Are they paying too much? Is it a punt, like you say, right? A lot of that value is just associated with the riskiness of those future development assets, because you value these things on a price to NAV ratio. What's the NAV of the portfolio? But the NAV, your NAV of these development royalties, there's you've got to risk that, because a lot of the development assets, they're your base case production scenario is what the royalty company will just assume that they'll develop it on the timeline that the company says.
Yeah.
But things always go worse than that. And so it's, you've just got to risk that for timing and also technical challenges that they might have when they're in production. So here's an interesting question from the call that actually happened today from Glyn Lawcock at Barrenjoey.
Good morning, Julian. So Julian, I'm just looking at the information in the Trident presentation that you gave the link to. In that, it's got price to net asset value ratio where Deterra is trading at a premium and Trident trading at about a 50% discount. Can you talk through why you didn't think about scrip rather than cash for this deal? Because, I can understand if a company wants a royalty from you, they want the cash, but this is buying a company. So did you look at it? That way we could have maybe protected the balance sheet better?
Morning, Glenn. Thanks for the question. I think we certainly looked at a number of different options, again, as you'd expect. I think one of the considerations that you need to take, this is a cross-border transaction, and as you'd appreciate, scrip in cross-borders can be a very complex exercise. And we're looking, I think, when you would have noted in the release, we talked about the nature of the offer is providing a good cash return and providing liquidity to Trident shareholders. So that's how we thought about it, Glenn.
Okay, I guess they could have taken your shares and had liquidity in Australia, but so be it.
So he says there are complications using scrip in cross-border M&A. Personally, I'm not an expert on what the cross-border implications are here, but
for tax,
whatever that he's talking about. But I can't help but think the bigger picture consideration for Trident is wanting to lock in deal value in cash instead of accepting Deterra shares, which Trident probably knew Deterra shares would tank on announcement, and hence, we're a lot more keen for a cash transaction as opposed to a scrip one. Because if you did a scrip deal, Matty, you could keep paying out your dividend.
Bit of bloody yeah.
So look, more than just the deal, this is a complete transformation of Deterra as an investment proposition to its shareholders. They are halving their dividend payout ratio indefinitely. They're signaling to the market that shareholders are no longer going to be the beneficiary of that juicy maxi dividend, in the same way. You're only going to get half of it. Deterra are going to use half of that money in a value accretive sense, which you have to trust as a shareholder now, and you're hoping that Deterra's management allocates it effectively, but they're going to go out and buy more royalties or finance them into existence with the cash that with a huge portion of the future cash that now comes from Maxi. And that's a very different proposition to what shareholders had grown accustomed to. And the painful thing about this deal is that shareholders of Deterra can't vote on it.
One of them ones again.
Yeah.
Right.
Frustrates me so much. I'm a massive advocate that when you are playing God with shareholders' expectations, you should make the deal conditional on a shareholder vote. That's what this deal is. Like you're halving the dividend policy and buying a portfolio of uncertain future cash flows, and maybe you're paying overs for it as well. It doesn't take a genius.
Yeah, well, I think they voted with the sell button.
Yeah,
in the last 2 days.
But that's a frustrating thing in itself, right? It doesn't take a genius to think, I reckon this deal will be pretty contentious amongst my current shareholders. And my message to management, whenever you have that thought process, you know what you should do? Bake in a shareholder vote into the transaction conditions. It's a fucking no-brainer.
Yeah.
Of course, Trident wouldn't want that, neither would Deterra or any of the advisors, but it's the right thing to do, Just if you remember, there's a famous transaction call when Freeport McMoran acquired this giant oil and gas. I think they paid like 40-odd billion for, might even be more, billion for oil and gas assets, which were once upon a time Freeport as well. And scheme of arrangement agreed. So there's transaction protection. Freeport shareholders who are owning it because it's this giant copper vehicle are now like, fuck, I didn't want to own this oil and gas thing. And they couldn't do anything about it. So, it's like, I just think those are instances in corporate activity where you're playing God, you're really changing shareholder expectations. If you're adamant that this is a good deal, well, fucking put it to your shareholders and back yourself to persuade it to your shareholders that it is a good deal. Because otherwise, how does it come across? It come across like you're trying to substantiate the enormous cost base that you've built into your company, which is unreasonable. And now you're backfilling that because the alternative of stripping it is unpalatable to you as management, and that's a pretty bad look, I think.
How is there a way, because of the mechanism? You're saying that they don't vote on it because they're buying it. Is there a way around that?
I'm pretty sure you can just chuck in as a condition of the deal. It's conditional on shareholders
so
more than 50%. Yeah, just like in your make it a CP of your deal,
Yeah, right.
Yeah, I think that's just like a responsible way to go about it whenever you're really messing with shareholders' expectations.
But they don't do it because they don't have to.
Exactly.
They don't have to on a deal like this, but you can just set up an EGM and get your shareholders around it.
What's the royalty landscape in terms of, is Franco-Nevada's, are they the biggest royalty company in the world?
In hard rock assets, yeah. Energy royalties are an enormous business, and then Franco-Nevada is the king of mining, predominantly in the precious metal space, which was touched on sort of at length in the call.
Is it a tough, would you class it as like me starting a supermarket going against Coles and Woolies? Is there significant barriers to entry to become a royalty company because Franco-Nevada in hard rock has such a stranglehold on everything?
There's barriers to entry because Franco-Nevada has an insanely lower cost of capital than everyone else. So even Deterra, even though they've got these great cash flows, even they have a higher cost of capital than Franco. So because Franco have a lower cost of capital, they can actually it's easy.
Cheaper.
They can borrow money cheaper, which means that they've got competitive advantage. Financing new royalties, they can also buy stuff cheaper. Yep. So there are massive barriers to entry. You kind of got to get lucky and do a few good deals that turn out to be, really great royalties, and that builds it. Yep. Consolidation also happens a lot to sort of build these sort of companies. But I always thought of Deterra as its home is Franco in the long run, and Franco would just strip out the corporate costs on day one, and there's heaps of synergies. But this deal is going to make it, I think, like a less attractive proposition to Franco, I think.
Not if the share price keeps going down.
Yeah.
it might, yeah.
True.
I'm sort of stuck on what old mate said on Twitter. It's like, why didn't Franco buy it? The Trident royalties, like to get the Thacker Pass exposure. I suppose that's
Franco's royalties are.
Is it at scale for them?
I would like Franco. They typically got a lot of royalties, but the NAV of Franco comes so much from their producing assets, whereas Trident, it's like I think Franco trades at like 2 times NAV, whereas Trident was trading at like 0.5 times NAV. Thereabouts.
2 times NAV.
Yeah, it's crazy.
Yeah,
it's crazy, right? But I mean that's kind of because you model NAV based on mine life. But the cool thing about royalties historically is the ability to expand operations beyond your current reserves, and hence they command a premium. Whether 2 times NAV is the right number or not, I'm not sure. But I'm more comfortable owning a royalty company than a mining company because of the protection on costs. So,
Jesus Christ! I think what a learning journey.
I think the point to round that out on, as you touched on earlier, Trav, is the options the company had. They had to do a deal or to strip out the costs. And the question we kind of put forward is, did they really consider stripping out the costs of the business, or like you say, was doing a deal the only way they were ever going to go?
Yeah, like what did the two big dogs that take home, like in the last calendar year or financial year, it was 2.5 million. Is it possible for them under any other circumstances working for any other company to ever earn that much? And might that have been a motivation, to do this deal as opposed to creating shareholder value?
Yeah, but as a shareholder, like it really unfortunately makes fuck all difference to the dividend. There's a little bit, but doesn't make that much of a difference.
Well, I think it makes a big difference to the capital returns that they talk about, because if you NPV $11 million a year at a 5% discount rate, I think Deterra maybe use 7.5. That's a lot of fucking market value, right? A lot of market value if you can strip out that $11 million and replace it with one. NPV 10 million on a,
But that's across the board on the per individual holder.
Yeah, but that's
you think
still
about
on a percentage basis. What's on the table for Franco-Nevada buying it? They're the synergies because they'd strip that out.
And even if it's just a few percent more, you compound that cash that you're getting, not the company's getting, over time, and it just snowballs over time. You want
I suppose this is Max C's got some bloody life in it. Going to be breaking iron ore forever. Did they have to buy a royalty?
They could have bought a royalty or financed a royalty. I mean, this came with offtake, like a bunch of gold offtake sort of stuff, some streaming stuff in there. They're probably going to sell the gold offtake portfolio, which is my interpretation of the call. But
But they're locked into royalties.
Yeah.
That's the brand.
When they were spun out, the proposition
to mine, if that's what you're saying.
Yeah.
Just non-controlling bloody interest.
I mean, the proposition when they spun out was, the potential of creating this, ASX listed royalty vehicle, and over time, people's expectations, transitioned a bit and just loved the cash flows of Max C, and now they're trying to go back to the original kind of proposition, and that's making shareholders unhappy. But I think the way that they could have reinvented themselves is, like as JD said, cut out the corporate costs, position yourself as like an incredibly lean distributor of this royalty, and that's what shareholders like. No worries. It's a way to get mid-cap iron ore exposure that's attractive.
Mate, you know how this could bloody scale to become like a competitor with Franco-Nevada, or the first step, Deterra merge with IGA.
I knew you were going to say that.
Now that'd be a bloody talk about a royalty powerhouse.
Yeah, IGA is not a great royalty because you got to wear costs.
Yeah,
but
it should sort itself out over time.
Yeah, you don't have to worry about management overheads.
I mean, geez, there'd be some bloody fucking some vacant office space after that one. Yeah. JD, speaking of bloody lithium, the battery bloody chemical. Rio's, is it Jadar?
Yeah, I think
Jadar.
Jadar would be the most Aussie way possible of saying it.
Jadar. How bloody good is Serbia?
So this one
God's country.
It's come out of left field a bit, fellas.
Go Novak Djokovic.
I hadn't been anticipating this one coming, but all of a sudden Serbia's wording and positioning toward the Jadar project is super, super positive. The president of the country said the mine could be up and kicking by 2028. And it's a big old project. They're targeting 58,000 tonnes of lithium carbonate, as well as a bunch of boric acid and sodium sulfate over a 40-year mine life. It's a big, big underground mine. So,
yeah, right. So I think that's for the punters out there, that's equivalent to about a bit below half a million tonne of spod concentrate.
Yeah, give or take.
Bloody show how big it is.
So to be clear, Vucic, the president in the country there, he was still the president when the license was revoked in early 2022. He's been there since 2017. And the license was pulled from the company on the back of local protest, talking about things like potential water pollution and locals being displaced and a whole host of other sort of related community and environmental challenges, which Rio Tinto have put in a lot of work toward addressing.
That's how you remember the license being pulled. How I remember the license being pulled is Australia not letting Novak Djokovic come to the Australian Open because he didn't take the COVID vax.
Coincidentally at the same time.
They didn't let him, but then they let him in and then they sent him home.
Did they?
And then they let the poor bastard.
I think the poor bastard was
hotel.
like, what am I doing?
Yeah.
Am I in or out? Okay, I'll go home.
That was tremendously stupid. But yeah, so it seems like Vucic and his party has consolidated a lot of support in that region, and they're confident that they have the community support and can press ahead. And it's a pretty chunky project. If it gets the go-ahead, a capex bill of 2.55 billion euros, that was from 2021, so no doubt that'll be churned up quite a bit, on top of 475 million euros already spent just studying it. Only a company like Rio could do that.
Me.
Yeah, and there were some interesting comments from Serbia's finance minister. So it'll provide an economic boost of 10 to 12 billion euros annually. I thought about it and I just can't wrap my head around those numbers, but it does sound really good. The same guy added that Serbia planned to ban lithium exports and they wanted to build a complete value chain in country. So I'm not sure what Rio thinks of that one. I'd strongly suggest to Serbia that they at least get Rio starting to build the project before they just scare them out the country again, because that is enormous. If you're going to build everything downstream from just producing the lithium carbonate in country, you're talking about a lot of investment. A lot of other companies need to come in. A lot of technical know-how needs to come in. So I'm not quite certain about that, but maybe that's how he would get to a figure of 10 billion euros per year.
Chucking the multiplier effect on it, mate.
Yeah, but annually, like I thought about it like in many different ways, and that is a big, big number, even despite how enormous this project is. Nevertheless, I think it's super exciting. We've spoken about a whole bunch of projects in Europe for the best part of a year now, and we're not often talking about projects actually happening, actually going ahead. So fingers crossed that this actually gets the go-ahead. Serbia is not yet an EU member, but they've been trying for about a decade to become a member of the EU, and potentially encourages others. We spoke about last week these tariffs and all this going on. So it's good to see a Western aligned project where you could get the lithium in the country. We spoke about that Critical Raw Materials Act, and a lot of it needs to come from within the EU, in particular by 2030 and later dates. And Serbia had been sort of getting a bit close with countries like the Arab countries, with China. They hadn't put sanctions on Russia, which had sort of caused a bit of alarm in the EU. So it's good to see that they've sided with the West on this one. And it's also great to see that this is a project that's going to be backed by the deep pockets of Rio, that they can show the people in Europe how to do this properly, that it can be done safely, that it can be executed well without any downside. You know, a sort of modern underground mine that doesn't have, you know, negative environmental impacts like some of the locals might be concerned about. On the flip side of that, fellas, there's one other repercussion that's worth discussing, and that I think Rio, if they do press go on this and they put the capital in, I think they're much less likely to do an M&A deal in the lithium space. And that could be a negative read for a company like Patriot or other potential companies who we know in the past some shareholders have been hopeful that Rio is the one that comes in and scoops them up. This would probably rule them out.
Back in the 60s today, old Patriot.
Yeah, we'll get into that a bit more. I mean, why don't we talk about lithium more broadly? There's been a bit of a rollover in a heap of the stocks. I'll read out a couple of names. Liontown, $1.50 down to $1 in the last sort of month. Pilbara, $4.15 to about $3.15. IGO, $8 down to $6. PMET, like you say, Matty, 90 cents down to 65-ish. Wildcat, 55 down to 33. So we're talking about 25% to 30+% down across the board. That's a pretty hefty whack in less than a month's time.
What's driving that, JD?
I think there's been a noticeable sort of change in the short-term consensus view of where lithium goes, and a lot of that's been sort of feeding through over the last month. We saw Albemarle.
Because this is sort of back where it was before it recovered. They've sort of come.
That's right. There was a bit of a sort of dead cat bounce, if you like. These stocks ticking up substantially. We know Liontown had been below $1 before on the back of financing issues and whatnot. So I think people thought we were through the worst of it, and that spot prices would sort of have a sort of lower bound of 1,200 US on a 6% basis for the remainder of the year, and then steadily recover. But that's not really how commodities kind of work, is it? So the low that we saw was 850-ish, I think, in January. And
so I guess the prices held, but the equities have really been hammered irrelative to the price in the last month or so.
Well, price is super hard in the lithium space, right? We don't have a good read on it. There was the sort of quote unquote spot price that we see had come back from 1,200 down to 1,100. And I'll flash up a couple charts here to sort of paint the picture of the negative consensus that we're seeing. So one here from Citi is showing total inventories of lithium carbonate. They're back at their January 2023 high. And that was the thing that sort of came out the blue and scared a lot of people that, oh, wow, there's huge amounts of inventories at all different levels. And that, led to, that sort of coincided with the peak of the price and it really coming off. And here's another one you got from JP Morgan, a noticeable uptick in China's carbonate output. So prices are weak, but companies and countries have not stopped producing lithium.
Yeah, and we interpret in that chart there, the China one, that's from their own Chinese lithium feedstocks, the lepidolite, the spod and the brines in China.
That's right. That's not including their imports, Matty. And then a last one also from JP Morgan. This one shows the China lithium concentrate imports from Africa. Now, this is another thing that has sort of come completely out the blue. It really come out the blue as to the speed of it. People did not think all these mines in Africa could get up and running so quickly. And if you just look year on year, roughly from April 23 to April 24, there's a 4x increase in the amount of imports coming into China of spodumene concentrate from Africa. So
there needs to be a bloody African money in mind. Need to they want to get this country going. They need to go Africa.
We just need a correspondent over there.
Yeah,
mate.
Go Africa, and we'll sort the Go Australia out. Let's just go. Let's think about the world, boys. Right. So what's bloody? So you'd say, I guess, consensus in the short term's gone a bit negative. JD.
100%, mate. I mean, just look at a couple of the comments from some of these banks. Citi are now saying prices need to trend toward US $800 to see a rebalance. UBS, they're talking about 1,000 to 1,200 for the remainder of 2024. In parallel, they're supporting this by saying that stockpiles of African spod as well as Chinese lepidolite keep growing. And you compare that to a Jadar report from a few months back. This one was on IGO, and we're talking about prices baked into the model of over 2,000. So granted, that one is on the higher end, but you're seeing many more people sort of firm up their expectations that the rest of 24 and into 25 will be, below where we are right now and potentially touching those lows that we saw a few months back. And that is that's not such a good sign for some of the ASX miners, is it?
I'd hate to see Jarden's price target on MinRes if they were using 1,000 to 1,200. If they're using $2,000 for spot, geez, holy snap and duck shit.
Yeah, it
should be in the 30s.
It should look a bit rough. I mean,
JD,
we've got Liontown. It's crunch time now. The old lie detector, as they say, is getting flicked on as we sort of speak. And we know there was an investor day a bit over a month ago. The feedback, it wasn't stellar, it wasn't outstanding. They've got a lot to prove, and ramp up is hard. So it's a bit of pressure on them. IGO down to a 4.5 billion market cap. They recently upsized the loan facility they had. As a bit of a side note, that lawsuit that S32 slung them, that one's gone awfully quiet. Not that it's super material to them, but I'm keen to see where that lands. And then lastly, you've got Pilbara. undoubtedly the market darling here, despite having what I think most people would call a bit of a worse asset than Greenbushes, being the standout asset in the industry, still capped at just under $10 billion. So they keep on delivering. They've got solid management. They've got a solid track record of executing, but they really have to with a price like that. Otherwise, it could unravel, somewhat.
Yeah, it's not just the price. You got Silverstone up there littering the joint with power.
Mate, how could I forget?
You can't just look, management are one thing, but it's knowing whether they're good enough to identify a world-class mining services provider when they see one, and they've done that. So that's a big tick. That's hence why, bloody check this out. That's why these bloody EV stations and power stuff's getting thrown up everywhere at friggin' Pilgangoora. So look, solid management for Pilbara, but on the back of bloody solid mining services providers like Silverstone to make it happen.
If you think of the power required for them to, ramp all the way to P1000, right? Mate, that's because of Silverstone.
Yeah.
They actually make P1000 a possibility.
Like, take Silverstone away, it'd be probably P900.
Yeah.
Just wouldn't really get there. So you want to get four
probably
digits in your bloody P's. You want to become a market darling and have Aussie Super just keeping your share price propped up. Just become a Silverstone customer. Be powered by Silverstone. Go Australia. Anyway, so you'd say lithium's. Would you say it's not hated enough yet to get people really contrarian interested?
Matty, you have taken the words out of my mouth. Not enough companies, if you're talking about a really contrarian, really hated space, not enough companies, and you don't want to see this, but not enough have gone sort of bust. There hasn't been enough hardship. People are still really bullish it. Just get a bit of a sense check and look around you. Look on Twitter and these sorts of things, and people are still talking about it. And they're still looking to buy back in, and that doesn't, it could bounce again and so on, but you wouldn't really call this a uranium, which we're going to talk about, of 2017 or 2018, those sorts of time. It's nowhere near there yet.
I think there's a few still attached to the old price.
Yeah.
It's a...
Which... Yeah, I need it to go back up, please.
Yeah, the old anchoring bias is something we all kind of suffer from, right?
Well, JD, I like the new way we're sort of running this show now. You just type a title in, a dot point. I'll see if I want to. You just lead me to the water. And you did it last week, and I don't know if you're doing it deliberately. Like, how do I get not more something out of Matty?
I saw the headline. I saw there's only one man from the job. That is Matthew Michael.
Well, and as I said, I've got to really get up the curve because I've got to be, out the front of Canberra fucking quoting bloody, everything on the micro stage of uranium. I've got to know me facts and figures. So consider this a bit of training. On the back of Japan looking at expanding nuclear. So you wouldn't say expansion, but we'll get into it. Let's get into the weeds. So they announced, or the economy ministry is considering allowing the expansion of nuclear power plants as older ones are being decommissioned. So this is likely part of there. So every 3 years they have this revision of the national energy strategy. So it's likely, I think that's this year. Last one was done in 2021. And that stance from 21 was that Japan will reduce dependence on nuclear as much as possible. So this quote here, this possible expansion might create some backlash because it's a very politically sensitive topic after the 2011 Fukushima disaster in Japan, nuclear. So they currently have 33 nuclear power plants in the country that are classed as operable. So 11 or 12 of them are operating in the country. Further 14 are in the approval process to be restarted. This was data back in March, and 27 of them have been shut down. There's 2 in construction. So because Japan were 30% nuclear powered before Fukushima. Then Fukushima happened in 2011. They went to 0 by 2014. It's now sitting at around 6% of Japan is powered by nuclear.
And to be clear, Matty, you say their current stance from 2021 is to reduce dependence on nuclear. Has that been updated?
This new revision hasn't happened yet. But
'Cause
I think it's 3 years, so it's happening soon.
Yeah, because it does seem that their actions are somewhat contrary to what they've been saying.
Yeah, yeah. So because their goal was to, where are we? Bloody
Cut 46% of emissions by
Yeah, that's
2030.
the one, JD. Yeah.
Yep.
So and then become carbon neutral by the middle of this century. So gonna need bloody nuclear to do that. And the thing that's made probably been nudging it a bit is the diminished value of the Japanese yen. So every bit of power or fuel that they have to import is costing even fucking more now. So that's why the price of power has gone up a lot in Japan.
Fuck, Mr. Macro over here.
Don't you worry about me, mate. And
Yeah.
They
bloody-
wanted inflation,
Yeah.
and
they got it.
they got more than their fair share now.
Yeah. So, and I remember they're sitting at about 6% nuclear at the moment. They want to lift that to 20 to 22% of Japan powered by nuclear by 2030. So that means they've got to bring back on around 11.4 gigawatts of nuclear reactors. And last month they actually announced that the KK nuclear power plant would resume operation in October this year. So it's the biggest nuclear plant in the world. So TEPCO, they were the operator of the Fukushima plant that had the meltdown in 2011. So that's Tokyo Electric Power Co. So this KK nuclear plant, it's a bloody long name I can't pronounce. They call it KK.
Mm-hmm.
This will be the first reactor that they'll operate since that Fukushima disaster, if it comes back. So that KK has 7 reactors that have a total power output of 8.2 gigawatts. So they're needing to bring on 11 and a bit. This is 8.2. I'm not sure how it works like from the location, if that counts as to power the whole country or not. So, and the thing is, they unfortunately had a 7.6 magnitude earthquake at the start of this year, killed 80 people, and it was the epicenter of that earthquake was 120 kilometers away from the KK plant. So like Japan's a very heavily seismic area. So I think a lot goes into making these nuclear reactors seismic proof, but that creates a lot of fear in the country, that side of things. So if you look at let's look at Japan versus the rest of the world with nuclear power and what it is now, and look where I guess a lot of the growth's coming. So I'll bring up some charts here. Fuckload of nuclear power generated in USA, China, France, Russia, and South Korea. They're the big ones in terms of nuclear output per country. So in 2021, Japan was sitting at about a quarter of what Russia was generating, 5%. So
Matty, when you say that, are you talking in terms of the percentage of their electricity mix that is made up of nuclear, or in terms of power output?
So just grid power. That's how I'm interpreting it. Grid electricity. So not cars and fucking boats and shit. So if you look at countries and how much of their, grid power, baseload power and all that is bloody nuclear, France, 63%. 63% of the power is from nuclear. South Korea, 30%. USA and Russia are sitting at about 20%. But then Japan and China, 6% and 5% respectively. So remember, Japan was previously 30% of their country was nuclear. So look at this for freaking growth in China. So China have added 37 new reactors in the past decade. America only added 2 in that period. They've got another 36 reactors under development, and they can approve, they said, about 10 new reactors every year. And they're looking to pretty much by the end of the decade, they're going to leapfrog the US as the largest supplier of nuclear power for a country. So of largest amount of nuclear power generated.
Yeah.
And what do you know? They build them quicker than everyone else.
Yeah.
Who would have thought? So since 2010, pretty much all the Chinese reactors were built in 7 years or less. So, and consistently. Russia, they said they can pump them out between 6 and 9 years. Korea, they built 3 reactors in the UAE in under 9 years.
I think they completed the 4th there.
Yeah, I think it's pretty bloody, and it was on a similar time frame too. It was around that 9-year mark. So pretty much if Australia ever wanted to build one, once they make up their fucking mind which one person's going to run the country, the greatest country in the world, boys, that's probably a decade and a half for us if bloody China takes 7 years to do it.
Mate, the Chinese premier's in Australia right now.
Is he?
Talking up our friendship.
Jesus Christ.
It's back on the tracks.
Really?
I better take the phone off silent.
We'll just get our friends from China to...
Xi's here.
No, the premier, not Xi.
Lee, Premier Lee, bloody, that fella.
He's visiting a hydroxide plant.
Oh, yeah, he's down at the Lithium plant. He'd be like,
this is what Tianchi's not doing right. Because
like,
I told him.
I'd be like, geez, you fucked that bit up, you fucked that bit up. But Japan, on the other hand, remember, in comparison to China, so China are building shitloads of reactors. Japan, they've got a shitload of just operable reactors that have been just, switched off and awaiting approval. So they've got these ones to turn back on and possibly new constructions to replace these decommissioned ones. So, and for them to get back, if you look at this chart, Japan get back to 20 to 22% nuclear. That'd see them back up with Russia as like sort of the fifth biggest nuclear country behind US, France and China. So keenly waiting to see if we'll see the return of old Japan in the nuclear space.
Says a lot, doesn't it?
It's fascinating
it's gonna be a big contributor.
Because of the geography of the country, right? They don't have enormous space to lay out solar panels like, we might here in Australia. Same goes for wind. They've got a bit of space for offshore wind and whatnot. But it's a super, super densely populated group of islands there. So
and commodity poor. So like they've got to import coal, LNG, and all that. So, and that is going through, as I said, bloody decreasing currency. Great for exports, real shit for imports.
And the same, it's a similar sort of story for China as well. They are focused with energy independence, and they want to be able to run and not be reliant on other countries. And that is firmly one of the reasons why they're so big on EVs as well. Because if they can power them, be that through nuclear or coal plants, they're not as reliant on oil imports from the Middle East and all around the world. So it's going to be a big theme over the coming decades.
So you look at percent population, like if China continue this trajectory towards, like as I said, at the moment they've got 6%, 5% nuclear, and they keep bloody building them. Like for China to get to 20% nuclear, like the US is, like holy snap and duck shit. That is a shitload of uranium and reactors needed for that, because that is one fucking big country. And what is it of the global population? Is it a fifth, quarter?
It's about a seventh, I think.
Seventh. Quarter, seventh,
1.4 billion people just behind India now. And you think about not in terms of percentage, but in terms of actual power output, given that they are the factory of the world, it's just remarkable.
Well, it's like you look at, and the interesting thing is like Japan's population is just a tiny bit smaller than Russia. Like that is how big Japan is in such a concentrated area.
And that's been declining, right?
Yeah, double Korea, but so bloody well, I told you the rise of Japan and Korea, boys. Fucking how good is it? I'm going there.
Let's do it.
Let's do it. Oh, now.
Nah, we don't need to talk about BCI.
How good's salt? You don't want to talk about BCI?
Nah, I reckon that's a good spot to leave it. We've spoken for an hour already.
Sorry, BCI.
Nah, I shouldn't have wasted an hour reading about it. It's not that interesting.
Hey, you've got it in the bank for tomorrow, JD.
I do. I learned a bit.
So did I. I learned shitloads today. Thanks for making me learn stuff, JD. I would have sat there and done fuck all otherwise.
Oh, good, mate. That was fascinating. That macro.
China and Japan,
that
mate.
macro mix, that energy security that countries are after is super, super fascinating.
It's like the US is staying still a bit. I think there's only one reactor under construction in the US at the moment.
Well, one just came on.
The one in Georgia?
Came online. But I mean, I think the big thing for them is because they've historically been strong is keeping them going. If they can get the public comfortable with keeping them on for a bit longer, and then, hopefully we can build some more as well. So that's the first step, right? California extended the life of I forget the name of it, the one right on the coast there. in the past year or so, past couple of years. So it's a sort of step in the right direction.
Oh,
in
and just
my
like
opinion.
to think, looking at those numbers, getting like a gauge of how many reactors are in Japan and all that, just feels so insignificant over here. Like to think we can't even get one built.
Well, we've got a good relationship with the Koreans, and they are the country that built all those ones in the UAE. And that was a 2-decade-long project that took a long time. But if a country as fossil fuel rich as the UAE can build them, then the greatest country in the world can too.
Go Australia.
Go Australia.
Fucking anyway. I can't believe I'm having to pretty much go down a government route to try and save the country. Like, can't I just do fucking podcasts? But bloody,
your calling in life is right there.
I don't trust people. Anyway, I trust these people. The bloody partners. Silverstone, Pilbara Minerals, trust them. And Mika Metals, trust GetWet Solutions. So much trust.
Who else do you trust, Matty?
I trust VRIFY. VRIFY AI.
So do I.
Mate, DSI Underground, trusted by every underground mine in the world, and if they're not, they should be. CRE Insurance, trusted by Africa. That's trust. WA Waterboards. See WA Waterboards, GetWet Solutions, potential bit of M&A on LinkedIn. Yeah, a bit of dialogue going on.
The AFR talking about it.
Oh, Brooks, talk about Western Australia, trust in the Brooks Group. Brooks Airways, and geez, guess who I saw at Jerry Seinfeld after Rhino Sullivan.
Did ya?
Yeah, bloody gave his missus a hug.
Good man.
Yeah, good okay, Drill. And
Thanks to Spark.
thanks, Spark.
Hootaroo.
Hootaroo.
The information contained in this episode of Money of Mine is of general nature only and does not take into account the objectives, financial situation, or needs of any particular person. Before making any investment decision, you should consult with your financial advisor and consider how appropriate the advice is to your objectives, financial situation, and needs.